this OBS studio, and that's why it
Okay.
maybe started or whatever.
So we're live now. Okay, so welcome everybody. We have a special guest, the Russian dude. I put a link
What's
of
up,
his
everyone?
channel. Yep, I put a link of his channel in the chat, so everybody try to subscribe. He does finance videos, mostly shorter videos, like straight to the point, explaining a topic. And he's trying to complete a series of 500 videos. And it's really good because if you want information on a particular topic, then you don't have to sift through a half-hour video. You can get it right away. So do you want to talk a little about yourself? And questions are going to start rolling in, but you can tell us about yourself if you like.
Yes, absolutely. So since we're about personal finance, economics, finance, and all these kind of things, I guess it makes sense to give my credentials of whatever you want to call it. So I'm originally from Russia. That's why the name of the channel, The Russian Dude. In Russia, I got my bachelor's in economics. Then I went to Florida to get my master's, MBA, in finance. And now I'm a Canadian. So I guess you can call by my short that I'm in Canada and all these kind of things. So long story short, yes, I was in this finance economics type of world since 2011. So for almost more than 10 years already, I've been studying finance, economics, personal finance, all these kind of things. And more recently, for the same reason why I first was in Russia, then I went to Florida, then I came to Canada, I was not able to start investing, even though I always wanted to be investing. So since I was like 14, 15, my friend and me were like walking around pretending we're like stockbrokers or anything like this, because we thought that these are like serious, smart, clever people. And I always wanted to be like this, like stockbroker, have my BlackBerry, check all the charts every single time. At that time, I had no idea that you do not need to check charts every single minute to make money on the stocks. And so long story short, yes, I also always loved YouTube. And now I basically combined these two passions, like literal passions, you can call them, stock market and YouTube. And I started making videos. My channel started in 2020 August, which is like 15 months ago. And I started making just regular personal finance videos, like the same videos you see every day, everywhere, like what is like 5 best books about investing, what's the best next investment in the next year, and all these kind of things. And then I realized whenever I was studying myself, whenever I was improving my knowledge about personal finance, investing, and all these kind of things, I realized that every single time, just like Scott mentioned 5 minutes ago, every single time I was going on YouTube to see, let's say, so what is an asset-backed security? What is even a fixed security, fixed income security? I was seeing all these 15, 20 minutes videos, and I just needed straight to the point answer. This is where the original idea of my mini series, which became big series of almost 500 videos, came. And this is basically where I'm in 2 minutes, literally in 2 minutes, I'm explaining the basic concept of something extremely complicated about personal finance, stock market, investing, or even trading, which is literally you just type what is a MBS, which is what is a mortgage-backed security, and hopefully you can see one of my videos, which is like white background and yellow jacket. Right now, I have 490 already videos about straight to the point topics. I'm planning to make like 50, 60 more. And after this, I'll switch to something more classic YouTube style, which is basically like these 10, 15 minute long videos, and start making something like this, but with a twist, 100% with a twist. I don't want to be another YouTuber who is going to tell you like, these are the stocks for October 22. These are the stocks for December 23. I want to be something more special. And this is, I don't know if you can tell about how much I love YouTube and stocks. This is what I'm doing right now. I'm in the very beginning of my journey, just getting all the views, building the community. Everyone is welcome. Every single Friday, I'm also doing live streams. I'm welcoming every single viewer by their name. So right now, I'm just building this community of friends, of investors, of buddies, and everyone is welcome.
Is KK Investing, is he on your channel? Because he said love the channel. I didn't know if he's talking about me or you.
Unfortunately, it doesn't look familiar for me, but if you acknowledge yourself, if you say hi in the comments, I will definitely remember you. So most likely it's about your channel.
Okay. Well, if it's mine, thank you. Unfortunately, his videos are short, and the YouTube algorithm may not reward short videos. So watch his videos, and they're real short, 2-3 minutes, and you get a lot of information. It's all jam-packed. I figured this trick out, and then make my videos longer, so I try to get more views. Updates on WTRH. Well, their earnings I don't think were that great, and they got Did they get downgraded? But yeah, the stock came all the way back down to the price I bought it at. Actually came down a little lower. But they have things in the works. WTRH Waiter Holdings. I don't know if you're familiar with this stock. It's like DoorDash or Uber Eats.
That doesn't sound familiar.
They just a delivery service. So if somebody wants food or groceries in their town, they could just go on their phone and then order it, and somebody will deliver to their home. That's their main service. They also, if you're in a restaurant and you want to order food, now you can just click on the QR code on your table and then order it through your phone. And this saves saves the restaurant a lot of money, because the waiter or waitress doesn't have to go to the table, get the order. So that saves time. Plus, there's pretty much no mistakes unless the person picks the wrong item. But and so the restaurant can streamline things. But it's a risky investment. So I mean, you gotta. It's a pretty low. Let me bring it up.
So what's the actual name of the company? Because ticker symbol doesn't sound familiar.
Waiter Holdings.
No.
Let me just. I'm going to share my screen so we can. Yeah, it's a cheap 135 million market cap. Yeah, it's already. I got it like I did a video. It was like 80 cents, and I was like, "Wow, this stock should be trading more than 80 cents." And then when I went to buy it, Morgan Stanley bought it, unfortunately, that same day, and the price drove up to I got to think at 119 or 120. But then it was up to $2 almost right away. So I was up like a ton just after a week, but now it's back down. But that's the market,
Quick gains, quick losses, especially when the stock is so little, like hundreds of millions of dollars. It's like small cap stock, if I'm not mistaken. Especially penny stock, it's like $1 each.
Yeah, I usually don't invest in this, but then people were saying that I'm too conservative in my investing style. So I want to take some risks and just invest in some. I also invested in this. These are only 2 risky stocks I invested in. Forte Biosciences. They have more. They failed. They only have one drug in their pipeline, and that drug failed phase 2 clinical trials. So the company said, we don't have any other drugs. So the stock went down like 80% that day.
Yes. Yeah, biopharmaceuticals, they're just like this. It all depends if you get approved or disapproved. If it gets the approval, the stock is up 40%. If it doesn't get the approval, stock is down 40%. So it's a big ride in these stocks.
But the reason this was so appealing is that it has no debt. You see the market cap is 42 million, and the cash on its balance sheet is more. With no debt too, so it doesn't have to. It has more cash than its market cap. So there's no risk investing in the stock besides just waiting forever for the stock to move. But if they just announce that they're going to start another drug or they acquire a company, the stock may go up back up to like $5, $10, $20.
Yes.
And then when the drug gets denied, it'll come crashing down. But so at this point, I don't see a risk in this stock, and there's no really downside. But I could be wrong. That's just how I see it. If it has more cash than its market cap. What do you think? What do people call you? Should I call you the Russian dude or
You can call me Artem. That's my real name.
Yeah, Artem.
Yes. So, but yeah, whatever. So long story short, I'm not investing in these kind of companies, in penny stocks or in the small cap stocks, even though it is interesting. And you should definitely be prepared when you're investing in these stocks, that you can literally get 40% one day, minus 40% the next day. Definitely, I don't think I have ever seen the company which had more cash on its balance sheet than its entire market capitalization. So this is a very interesting one. And definitely, like you say, that there is almost no risk in this case. I would say that, yes, I kind of agree, because yes, there is no risk. And all the total assets, I mean, current assets, current liabilities, like what? Yeah, if I'm not mistaken, the current assets are like more than 15 times exceed current liabilities. So they can definitely survive for the next several years easily. But what about the stock market? Stock market is never like, if stock market will be rational, basically, I would say everyone will be making money easily, because you just find a high quality company which is undervalued, you invest in it, and that's it, you're good to go. But stock market is irrational, especially in the short-term perspective. It's so much about the sentiment of investors. Once again, investors invested in this company, then the drug failed to get the clearance from FDA, to get approval from all the respective sectors or whatever. And long story short, because of this, investors are like, okay, I'm not ready to wait another 5 years, because developing new drugs as a biopharmaceutical company, it takes so many years for research and development. And if your first drug didn't get approved, maybe you'll reapply for approval next time, which I don't know when it's going to be, 1 year from now, 2 years from now. So people, they're impatient. They just don't want to wait another 10 years for their stock to be trading in the sideways. They just want quick gains, especially because in these small penny stocks, there's so many traders in comparison to like more established companies, which has so many investors. And traders, they want quick gains. Their investment they trade didn't work out. They locked in their losses. They lost several $1,000s and they moved on, because in trading, I am an investor, first of all. I'm an investor. I never traded in my life. I'm a long-term investor. But I know, relatively speaking, how traders think. So once again, for them, they have the structure. If they didn't work out, they have stop losses. If the position, they just cut the losses. They forget about the stock. They move on. And that's why I guess it crashed so much, especially because there was so many algorithmic tradings, because as soon as the price reaches a certain level, algorithms take place and everyone starts selling. Institutional investors start selling, insiders, traders, investors, everyone starts selling. And for this reason, once again, coming back to the original statement I made while talking about this company, I do not invest in small cap companies and penny stocks. It's very highly volatile. And when you combine this with biopharmaceuticals, which is still extremely volatile, even if it's a several dozen $1 billion company, this creates this chaos, which once again, just one disapproval can bring the stock price like down 90% or even more. So very too much speculative investment for me. That's my conclusion.
I tell people I don't really ever invest in companies with market cap below 1 billion. So I'm kind of deviating because I just want to like test it out, and also, yeah, I'm just kind of testing it out, and I'm probably going to lose, but I'm going to see what happens, because the only way you learn is by doing these things. But I play it safe. Like my portfolio is, as everybody knows, like I talk about all these stocks, and people don't understand. Just because I understand and I could explain most of the things that are going on within a company doesn't mean I could predict the future of that company.
Absolutely.
The only thing I think I do better than most investors is that I don't panic sell. So that's the problem, I think, with most people, not just in investing in anything in life. We kind of we hit a wall. Like if we're trying to learn something, like learn a language or learn a sport or trying to grow our portfolio, we hit that wall and we get all disgruntled and figure, what's the point? I'm wasting all my time, and we just stop doing it. Like anything, like I saw a lot of people who started YouTube channels when I did. I don't see them anymore because they weren't getting the subs or views, so they just they think it's a futile exercise and just quit. But you have to just power through. I powered through plenty of years when I wasn't making money. I still put a lot into my investments every single quarter or month, and it grew a lot. And the first 10 years when I invested, I didn't have. After 10 years, I probably only had like $20,000, $30,000 in my account. But these last 5 years, it more than doubled.
Good job.
So, but that's how it is. When you have a large amount of money, and that goes up 20%, that's a big number compared to when you initially start. If you start with 1,000, it goes up even 10%. It's only $100. It's not life changing. But when you have like $1 million and it goes up 10%, $100,000 is a lot.
Yeah, a lot, 100%.
But pay attention to UPH. Yeah, I think. Tell us about your portfolio. Which industry do you think is a great potential for long-term investment? You want to tell us about your portfolio? Artem?
Yes, I can briefly introduce it. So long story short, once again, yes, I'm a long-term investor, not a trader, not a short-term investor, not anything like this. Everything that I'm buying, I'm planning to hold for years. The longer, the better. So I all started investing, unfortunately. Once again, I don't think I finished this thought last time. So the reason I was not able to start investing earlier than almost 2 years ago. 2 years ago, I'm investing already approximately. It is because first I was in Russia and I was barely 18, let's say so. Then I went to the US and I didn't have my social security number. And as you might already all know, in order to open the investment account, you need to have the social security number. And then when I came to Canada, yes, within a couple of months, I finally started investing. So my portfolio is obviously long-term oriented. Originally, my foundation of investing mindset was created by intelligent investor Benjamin Graham. Very good book. It's about long-term investing. But then I started reading more modern type of investing. So the ones which is intelligent investor is all about value investing. And majority of my portfolio is in value-related companies and value investments. So from my approximately, I think I have 15 positions, which I can briefly introduce in a minute. From these 15 positions, I would say maybe 8, 9, 10 of them are value plays, which means that there are very high quality undervalued companies, which might not grow as much. But as soon as there is stock market correction or stock market crash, these are the companies which will suffer the least. Because long-term investing is not about maximizing your weekly or monthly or even annual returns. It's about protecting your downside as much as possible, about protecting whatever you already made. Because you can make 40% return 2 years in a row, especially if you start investing since the beginning of pandemic. And then just 1 year when the stock market goes down by 30%, you're going to lose the majority of this 2-year progress just literally in 1 week. So long-term investing is all about protecting the downside. Once again, brings me back to majority of my portfolios in long-term value plays. And so for those of you who are interested in actually what I'm invested in, it is Lockheed Martin, my first company. This is the defense company, air defense company, which I'm thinking to get rid of because this is it creates weapons. It's not this ethical, let's say so. And this is only 2% of my portfolio. The next company is about almost 8% is the Store Capital, which is the REIT, which is basically do not have that much money investing in real estate. For this reason, I am exposed to real estate through REIT, which is Real Estate Investment Trust, which basically means this Store Capital, it's the company that has so many literally one space, one floor, one building, small businesses. I mean, small, how it's called, buildings, small areas, whatever you want to call it, and they rent these places to various small business owners. And this can be family lawyer, family bank, like whatever you want to call it, like these small type of businesses. And so diversification across this is so big one. And for this reason, this is my exposure to real estate by investing in the REIT. Plus, they have pretty good dividends, which is like approximately, I think, 4.5%. The next one is Intel. I was doubting, I was arguing with myself so much about whether I should select Intel or AMD. This is like yin and yang in the semiconductors, I would say, in the PC semiconductors. So AMD is more growth side, but Intel is more value play. So yes, Intel is one of my companies that was not growing that much, or especially losing so much, because, you know, first of all, they delayed the production of their new processors. Now they have the new CEO. And this new CEO is when I have most confidence about, because he wants to introduce so many new things. One of the things that I like about the new CEO is that he wants to start creating GPUs, which is graphic cards, because Intel originally was known for their processors, and now they want to enter the graphics card game, which they were completely not present at all. And Intel, also one of the things why I am invested in Intel, I guess some of you who are watching from your laptop, if you look down, it will most likely say like Intel inside. Like I think almost every single laptop I ever had in my life had Intel chip processor inside it. So yes, not performing good the stock, but obviously it's long-term play, so I'm very excited for the future about this company. The next one is Bank of Monreal, which is the financials. It's just the bank, and it's, long story short, it has pretty good financials. It's just the bank, as straight to the point as it gets. You just bring your money to the bank, they give you, deposit, interest rates on your deposits. You know how banking works, basically. The next one is Silvergate Capital. This is one of my more speculative high growth stocks. And this is another bank, which is another financial sector. And this is a regional bank. Silvergate Capital. Silvergate Capital. Silvergate Capital, the stock symbol is SI. And this is one of my high growth, potentially good companies. This is Silvergate Capital, yes, SI.
It went up 11% on Friday.
Yes. It is extremely a speculative company. So long story short, what this company is doing, this is it separated from Silvergate Bank, and this was like a small branch, if you want to call it like this, Silvergate Capital. And so what they do, they are dealing with cryptocurrencies. I don't know if your audience is how they're feeling about the how they're feeling about the cryptocurrencies, if they're negative or positive about this.
We hate it.
You hate it, okay. So I can hate it too for you.
I'm kind of joking, but I don't invest in cryptos, but I don't really care.
Okay, if we have time, we can speak later about this. But long story short, you know this saying, whenever there's like a gold rush, you don't, invest in gold. You start selling like shovels to people who mine gold. And this Silvergate Capital is exactly the same stuff. This is the bank that has one of its major clients are these biggest crypto exchanges. If you heard about them, Coinbase, Binance, Gemini, Kraken, all these major, extremely big crypto exchanges, they are the clients of this bank. And this bank at this very moment, it's very unique, because it is one of a kind, because the idea behind this bank is that whenever you're buying cryptocurrency, you need to wait about 15, 20, 30 minutes before the transaction is confirmed on the blockchain, and then the cryptocurrency gets deposited into your account. But if you're a client of this bank, and if you have deposits with this bank, then these transactions are immediate, because this bank has cryptocurrencies on its balance sheet. So for example, it works as an intermediate. Whenever you're buying cryptocurrency from someone, this bank gives you cryptocurrency immediately, takes your money, and then whenever the actual transaction is complete, then this bank gets its cryptocurrency back. So for this reason, transactions are basically almost immediate with this bank. And because major crypto exchanges are clients of these banks, it has almost literally monopoly right now. So right now it's in the very beginning, high growth stage. And the reason why it is related to cryptocurrencies, but it does not depend that much on the price of Bitcoin or Ethereum, it is because the money that they're getting, it does not matter. Whenever cryptocurrency goes up, there is a huge hype. People are buying cryptocurrencies nonstop. Whenever cryptocurrency is down, everyone is panicking, selling it. Again, trading volume is so high, people just dealing it. There's so much transaction fees. And the thing about this, because the bank is the monopoly, whenever one of the big expenses for every bank is the payments for the deposits. Whenever you deposit your money with the bank, they pay like 0.5% every single year if you're like depositing in savings or whatever. And because this bank has the monopoly at this very moment, they do not pay these deposits at all. So if you want to open the balance sheet, they see that interest expense from interest-bearing accounts is literally like 1-2% of total expenses. So one of the major expenses for this bank is almost non-existent. So for this reason, this is my high growth position, high growth company, and I have like about almost like 7% in this company. The next one's really quick. It's like Southwest, it's like airline companies. The next one is like Carnival Cruise Line. This is the new cruise lines. These are my recovery stocks. I'm hoping that as soon as everything is back to normal, people start traveling, start doing cruises. So everything will be like once again back to normal and the revenues will skyrocket. And as soon as everything once again back to normal, this is when I maybe will plan to sell them and we see how it goes in the future. Next one is Amcor. This is the producer of plastic, like materials of plastic, basically. I just bought this company and the ticker AMCR. AMCR. This is my just for the purpose of dividends, because this company has, if you scroll down to statistics, I think they have very, very big dividends, which like almost 5% dividends. The balance sheet, income statement, they're pretty healthy, but this company, obviously, it's not going to grow as much because it just produces plastics. But this is just basically for dividends. The next one is Eog Resources. The ticker symbol is EOG. And this is the oil-related company, but this is not like Exxon or anything like this. This is not the one who sells the oil. It's mainly making oil explorations. So this is like innovative ways to explore the oil. So the next one is Nucor, which is the basic material steel manufacturer, the biggest steel manufacturer in the US. Once again, healthy balance sheet, healthy financial statements. And this company for me mainly is also like for dividends. The next one is 3M, MMM. Also basically for dividends, like industrial company, all these like Scotch, so many like office supplies are from 3M and stuff like this. The next one is Nordic American Tankers. This is the shipping company, and this is only like 1% of my portfolio, and it's like $200. This is the company that fell almost 90% from its all-time highs, but the company looks pretty decent. So I'm looking for the next financial report, quarterly report, to see if they can destroy the expectations, because shipping rates are so crazy in the past couple of months. So, and then I will get rid of this. Okay, so next one is Corsair. Corsair, like it's like this RAM. It's RAM. Yes, all the keyboards, all the hardware for the computer. Pretty good balance sheet. All my friends are using Corsair. Whenever I was a kid, I was also using Corsair. So there is demand. I can see it in real life. So, and once again, all the future perspectives, all the future potential for the company that they are looking forward to expand their businesses, or this, like they have this Elgato stick that you connect to your camera so you can use your camera as a webcam. Everything is so cool. The next one is Airbnb. Like everyone knows Airbnb, we like go to the cottage and every single month or whatever. My father loves Airbnb. As soon as he tried Airbnb for the first time, he was like, I'm almost never going to use hotels anymore. So many friends as well, they're like so crazy with Airbnb, so convenient, so good. I did not invest in Airbnb at IPO because I know that 80% of IPOs, they are unprofitable during their first year. So I invested in Airbnb approximately when it was not at the very bottom, but close to the bottom. So I was just lucky. It could have gone even lower, but I was just lucky. Okay, so I don't know if I'm already spending too much time talking about my portfolio. Should I continue? I have 4 or 5 more stocks to talk about. What do you think?
Now let's talk about something else,
okay,
and then we'll go back to your portfolio.
Okay.
This guy is over diversified. Yeah, I kind of see that where you're going with that. I'm on the other end. and don't listen to me, but like I've put everything into one stock. That was in my 20s. But I'm not a big fan of diversification, and but we're all different as long as we're successful. Um, and when I show you my portfolio, I hope you realize that when you look at my spiders, how it outperforms most of my investments. So I would have just been better off not thinking about it and putting it to spiders. So it just shows you think I have so much knowledge, but like I don't think most people can beat the S&P index.
No, they
but
cannot.
It's fun trying, I guess.
And that's exactly what I'm doing. I know that I would be better off if I just invested like 60% in the S&P 500, like 30% in some developing markets, and 10% in commodities. So I'll have 3 ETFs. And that's it. I'll have exposure to almost everything that I need, basically. But for now, because once again, even though I'm in the world of finance and economics for like 10 years, I've been only investing for 2 years, unfortunately, because of the reasons I said earlier. So right now, I'm, let's say, so playing with the stocks. I just like stock picking. I like analyzing companies. I like reading their earnings reports. I like listening to their earnings calls. Right now, because my capital is not massive, it's not like millions of dollars. Right now, I'm just playing around, like trying to see if I can find the next big thing, if you want to call it like this, whatever cringe, how cringe it sounds. You can never find the next big Tesla or whatever. You just need to be lucky in this case. But right now, just interesting for me. I will have all the time in the world as soon as I'm getting bored, as soon as I don't like to do stock picking, or as soon as I don't have time to participate in earnings calls, yes, then I can sell majority of my portfolio, leave like 3 ETFs, and maybe one company that I believe the most. But at this point, investing will not be as fun anymore for me anymore. So right now I'm just playing around, basically. That's why I'm so-called over-diversified, even though I have like 15 companies approximately in total.
Well, this is the next Tesla. I don't know if you realized it, but Lucid.
Yes, I have Lucid, by the way.
Oh, you did? I just did a video on Lucid today. So before they sold the car, they were already bigger in terms of market cap than Ford. Ford, which has been around over 100 years, has sold millions and millions of cars, has a long history, and even though they had their struggles, they're going to be around probably for the rest of our lifetime. A company that didn't even sell anything. That's just the market for you. But I think you can make a lot of money with Lucid. I think it's going to probably go up, and I kind of wish I bought options, but Apple will be 10x someday with Apple Car. I have 31 stocks. I probably have like 9 or 10 stocks
of Apple.
I have Apple. Of course, I bought Apple at 1 trillion market cap, and of course, it's my smallest one, and I'm up 100%. That's Apple and Facebook are my biggest gainers. Facebook, I have a lot of Facebook. That's what is it? That's like, I guess 10% of my portfolio. No, 20% is Berkshire Hathaway. Yeah, but 20% is Berkshire Hathaway, and 30% is spiders. So I'm invested in all. I guess I am diversified because I invested in 500 stocks, the S&P index.
Yes, very well diversified.
You can't get more diversified than S&P index.
Unless you invest in VTI, which is total stock market.
Yeah, I just sold that to buy the Forte Biosciences. That was in my Roth IRA, VTI. I've always just added VTI, and that was my international fund. Leslie, thanks for joining. I'm late to the party, but I didn't hear any oil or gas stocks. No, he mentioned an oil and gas stock. I can't remember which one you mentioned, but I'm going to buy ET soon. I think I'm going to pull the trigger on ET. What's
my
that?
relationship with oil related companies is that like world is going away from oil, and we see it like everywhere. People try to do green energy, wind energy, water energy, like whatever you want to call it, like electric cars and all this kind of stuff. So world is getting away from oil, but it will not happen in 1-2 years. So we will not have absolutely no oil 5 years from now. Oil companies will still be relevant for the next dozens of years. But eventually, yes, the usage of oil will get as little as possible. Yeah, go ahead.
I think in 20 years we're gonna have more oil than we have today, or 30
Most
years.
likely it will be still more, but still people will be trying to get away from oil as much as possible. But yes, they will still be existent 20 years from now, 100%. That's why, once again, I have only one company, and it's not directly oil related. It's oil exploration EOG stock, and the rest, yes, and the rest energy related stocks. Instead of trying to figure out the next main source of energy, like some people think that the next main source of energy will be solar energy. Some people think that the next main source of energy will be hydrogen. Some people think it's going to be like wind energy. I decided not to try to, or like some people think it's biodiesel, for example. I decided not to guess which one is going to be the next big energy. So I just bought the ETF for entire like clean energy ETF, and the ticker is IKLN, like iClean basically. So it has all the companies which has like all this green energy. And besides only having American companies, what's so good about this ETF is that 40%, if I'm not mistaken, 40% of these companies are like Danish companies. So besides being diversified across different energy sources, they also diversified across different regions, which is USA, Canada, Denmark, Europe, China. So it's also diversified across different regions, which is also makes it so good.
Yeah. Do you guys on the chat invest in other countries? Let me know what country you like to invest in. It seems like American stocks have the most upside potential. And I remember at one time, it was like 15 years ago, I was investing in Chinese stocks and I was making a ton of money. But lately, it doesn't seem that way. So I get it's certain countries it just seems so risky to invest in. Like Alibaba, that's all we talk about, how undervalued it is, but it's in China, so it's never going to be worth what it should be worth, just because it's in China, which is a shame because the country deserves. Yeah, British American Tobacco that's a good stock. They pay a huge dividend.
Yes.
BTI, 8.69%. That's what you get with these companies, like tobacco companies. They're just cash cows. They bring in so much cash, so they can pay you a nice dividend, and they're not valued. Look at that PE below 10.
Because these are not growth companies. Yes, it's like you don't need to spend billions to develop a new cigarette. You just need to spend billions creating cigarettes. It's the same tobacco, the same paper, the same logistics you have, the same supplier, the same buyer. It's the same. Though for this reason, yes, they just however they reward their shareholders is just by paying huge dividends, and that's it. It's not growth story basically.
Yeah, that's what I don't like about tobacco stocks is same thing with cannabis stocks is that people don't like to invest in certain stocks, like because it's against their values. They're not thinking about money. They're thinking about so that's what I don't like is that I don't mind investing in a tobacco stock, but the fact that a lot of other people or maybe even some big funds won't invest in it because people prefer not to have that in their portfolio. So that does limit the upside of companies like this. So I bet you, if you look at their numbers, they're probably better than a 200 billion market cap company. But since they're a tobacco company, they have a low market cap.
It's common that so many investors don't want to invest in these unethical companies. Like I'm neutral to this. Like I don't invest in tobacco, but I do have like air defense company, which is Lockheed Martin, which once again I'm thinking to get rid of. So for me, I don't know, investing maybe it's about making money. I might be wrong, might be right, might be wrong. So long story short, yes, so many people don't invest in companies like this just because they're unethical. Maybe there was a person whose relative died because of lung cancer, and they will never invest in British American tobacco, for example. So it is quite understandable why so many people don't like companies like this.
Yeah, it's like what I hear when I make a video about a mining company, and then people write a comment like, "I would never invest in a company that kills people," and that. I mean, no company is out to kill people. Obviously, they're trying to make a profit, and by functioning as a business, they not only make profits, they supply jobs and pay taxes. Things happen, unfortunately. People die in warehouses. There's accidents, things like that. So you can't hold it against a company unless they're totally negligent, which I think most companies wouldn't be. So that's the only reason I kind of like don't have a lot of stocks in my portfolio, like mining stocks or cannabis stocks, for that reason. Not that I don't think they have good business models, because some of them are really well-run companies. What is it? Air Products, $500 million project in Saudi Arabia, near $1 billion in Alberta, hydrogen.
I guess this is about the exposure to next fuel source. And once again, for this reason, my ETF, which is iClean ETF, ICLN, it does have hydrogen companies as well. So even though I might believe in hydrogen as the next big energy source, I might not believe in hydrogen, but I have exposure to it. So even if it becomes, I will benefit from the growth of hydrogen-related companies. So this is why it's so good, this iClean ETF. Just a quick mention.
Right. My best friend is actually Russian. I told him to join the live stream. Are you from Ukraine?
No, Russia, of course, the Russian dude. Russia, one and only capitalistic communism country in the world.
But people from Ukraine call themselves Russian, or at least one time they did.
I guess if they want to be Russian, we are more than welcome for them to become Russian. So feel free to become Russian if you want. We're all Soviets. This is how we like to call ourselves. We're Soviets, post-Soviet countries. I was studying with a couple of guys. One guy was from Ukraine. One guy was from Azerbaijan. And we were always introducing ourselves as like post-Soviet countries, basically. So Soviet Union unites us. Russia, Ukraine, Azerbaijan, this divides us. We're all Soviets.
Soviets, right.
It's funny, Soviet person, allegedly communist, speaking about capitalism, stock market, investing, finance. I guess it's...
Yeah. So there's some talk about clean energy, solar power. We all know the Soviet uniform today. Yeah, that would have been a good idea. What does that mean? Is that just red? Wear some red. But all these, like we all know, like certain industries are going to be big, but like clean energy, EVs, we all know they're going to grow. But which company? Hey Ben, what's up? Like which company to invest in? There's just so many. That's a difficult part, right? I mean, you could do what Artem said, is just go with an index.
Yes.
To hedge yourself. So because who knows the next Tesla, but I don't know if there's an EV car index, but there probably is.
Stock market is all about high risk, high reward. If you want massive reward, which is like 10x, 20, 40x, yes, you might take your chances and select an individual company. which is like, let's say, so Lucid, Rivian, or whatever, Polestar, all these like electric vehicles companies that want to be next Teslas. Take a bet. Yes, you have low chances, but if this low chance of like 5% of it becoming the next $1 trillion company, this 5% chance can bring you like 40x in the next 5 years. But if you want to play it safe, so once again, high risk, high reward, low risk, low reward. If you don't want to risk at all, but you want to benefit from the industry growing, either it can be, whether it's a clean energy, whether it's electric vehicles, just invest in the related ETF. Like ETFs are relatively easy to create, like all this, like how it's called, Vanguard, all of them, they're creating ETFs based on everything. Like there's even ETF for Bitcoin. They're planning to make ETF for Ethereum in the nearest future. So even though if you don't want to invest in Bitcoin directly, you can just invest in ETF, Bitcoin related ETF. So once again, don't take chances. If you're a safe person, if you're near to your retirement, just invest in the ETF for the related industry and you're going to be good to go.
Yeah, no, you saw my portfolio. I have a lot of funds in there. I play it safe. I think and Buffett talks about this, once you hit certain thresholds, like people say, why don't you invest more in penny stocks? There's so much upside. Because once you hit like a certain threshold dollar amount, like percentage-wise, it doesn't really benefit me. It's hard to explain. Like if you 10x on a stock and you put $1,000 in there, and now you have 10,000, that could be 10% of your portfolio. But for me to make an impact, I'd have to put like I put into Waiter, like I put 70,000 to Waiter, but which is crazy. But unless I put a big chunk of money like that, it's not going to move the needle much.
No, it's common sense. It's math. Yes. Like if you have a company which takes like 1% of your portfolio and then goes 100%, it's only going to be like what, roughly speaking, 2% of your portfolio. So if your portfolio is like $50,000, it's going to go from like what, I don't know, like from $250 to $500. It's not going to be much difference. $250 only. Right.
And who's willing to drop 10, 20% of their portfolio on a penny stock? It's super risky. Unless you did like a Dogecoin, you dropped 1,000 of Dogecoin, and then who could pick a 50,000% increase, or a 50,000x mover? Like that's. And the problem is you don't know. The thing I was talking with someone about earlier today is you don't know when to sell. I don't like to buy things and not know when to sell. Like I buy Microsoft or Apple, I don't sell because I know it's going to go up over time. But I don't know when to sell. So if you invested 1,000 Dogecoin and then went on to 10,000, if you sold it, you would have been screwed because you could have had $10 million if you waited another month. Like, so I don't like investing like that. Like,
have you heard, just really quick, sorry for interrupting, have you heard about the guy who invested $8,000 in Shiba Inu, another of these dog related coins? So invested like $8,000 in Shiba Inu almost when it just started, and his portfolio right now is valued at, and not right now, but at its peak it was $5.4 billion. And this is the real story, because what the thing about blockchain is that every wallet is basically where you keep your cryptocurrencies, whether it's Bitcoin, Ethereum, Dogecoin, Shiba Inu, Floki, whatever you want to call it. So long story short, this information is in open access. Anyone can check it. You just need to have wallet address. You can put it in Google and you can check if it's true or not. So there is a guy who put $8,000. Now his portfolio is worth like $5.4 billion. So yes, news like this makes so many more people thinking they can get rich overnight. They can become billionaires overnight. And this is what brings all these altcoins, let's call it like this, to be a PG safe and stuff like this. So this is what makes these coins to go up so much. People see so many success stories. There is the guy who became millionaire with Dogecoin. The guy became billionaire with Shiba Inu. And so like everyone wants to find the next like dog related coin, invest in this. They're like sometimes even their like savings or whatever, and then they lose everything because these coins go up so much and they can go down so much as well, as fast as they went up. So yeah, that's the
Crazy.
story about dog related coins. I don't invest in any dog related coins for not an investment advice or whatever. not gonna touch them with the 10-foot pole like you Americans say.
Yeah, it's just it's same thing. It's like you could play lottery.
It's the lottery. It's gambling. Exactly.
There is a liquid. That's what I was thinking of, owning billions of dollars. How can you even sell it? Like, is there even?
So yeah,
And if what's that?
Yes, this guy, he cannot sell it all at once. Because if he sells it all at once, obviously it's gonna crash the market. Because he's like the whale who I think I did not go into much details because I don't invest in dog related coins, obviously. So for this reason, I didn't go into much details. But I think that this guy who is like 5.4 billion, he owns like the 20% or something like this of entire Shiba Inu market capitalization. So obviously, if he decides to sell his entire position, this is gonna collapse the stock market, so the price of the coin Shiba Inu. What he did, I think he did sell several millions of dollars worth of this stuff. That's why the price went down, but not as much. So he will most likely be selling in parts. Or what another thing you can do in crypto world, you can exchange one coins to another. So for example, if you want to buy Ethereum, you can either deposit US dollars and buy Ethereum, or if you already have Bitcoin, in some exchanges, they allow you to exchange Bitcoin to Ethereum. And I think this is also what this guy did. He was exchanging some of his Shiba Inus into other stable coins like Tether or whatever it is. And he was basically exchanging coins to coins, which was in... I forgot what was never like a same transaction, was the same asset class transaction, which does not trigger taxes, by the way. And then he was selling it like, so he put 10 million from Shiba Inu to other stable coin. Then he sold some millions of dollars to real dollars, $10 million to like Bitcoin, $10 million to Ethereum. And by doing so, he was able to withdraw at least some of his gains.
Yeah, that's exactly. You don't have access to it. It's not like owning Berkshire Hathaway, billions of Berkshire Hathaway. There's a lot of value to that. But owning crypto is like owning garbage. But people are willing to pay for garbage, apparently. But it's the same thing with the US dollar. There's nothing backing the US dollar. It's just we perceive it and we say it's worth this much, so therefore it is worth that much. So if you want to say this coin somebody invented is worth, there's nothing wrong with that. I mean, it would just stink if you bought it and then it crashed. But same thing with buying a stock too, and it crashed.
That's what happens with most alternative crypto investors, because as soon as the news about the next big altcoin like Dogecoin, Shiba, Floki, whatever, as soon as the news hits the market, as soon as they say the Shiba Inu is up 200% in the last month, this means that it's already too late to invest in this place. All the people who were able to make some gains, they did it before there was initial market hype. So whenever the news once again hits the market, this is when regular people like, I don't know, you and me and some of our friends, this is when they buy, and the price might go additional like 5-10% up because of this initial hype. But then, because that's it, buying stops, and all the people who are previously holding, they see that, okay, the hype is right now. Right now, this topic is the most discussed, and people just start selling it because right now is the best time to sell. And this is why the price crashes, and that's why all the people who come because of the news, because of Instagram stories or whatever, Twitter, they invest, and this is when they lose like 80-90% of their investments. So yeah, if you see something in the news, it's too late to invest.
that's what we got to figure out, and we have to somehow identify the future or the near future before it happens, which is really hard to do because you might identify it, but then you sell before, maybe a few months before or a year before. So you'd have to have conviction if you do buy something, like that guy who shorted the market right before coronavirus hit, Bill Ackman. He had conviction. Plus, he has billions of dollars. That helps too.
A little bit.
And he made a ton of money. I think so. I hear a lot of stories about this person who made this. I don't believe it all, unless they show you. Like that GameStop guy, I believe that because he showed his portfolio. He bought $50,000 of options on GameStop, and that turned into $50 billion.
I know the story. I don't know the exact numbers, but this is because the concept of short squeeze existed as long as the stock market exists. So this concept was basically forever. It's just that this guy who made it popular, the concept of short squeeze, he was the first one to discover it and bring it to masses. And this is why so many people followed. That's why sometimes Reddit community right now, literally what they do is that they search for the stock which is the most heavily shorted. They find the stock which has like 90 or even 100% plus short interest, and they just buy the stock, triggering a short squeeze in the future. But yes, he was the first one to discover it, and as everywhere in the world, if you're the first one in something, you benefit the most from this discovery.
Right. And I think he had a point with GameStop. He kind of sold me on GameStop. I thought it was worthless, but he made some valid points. Look at all these cryptos, and it's not like these are worthless. 183 million market cap. I mean, it's not huge, but 183 million, and it's 358th on the list. These are just things. But who would buy this stuff? Like, I understand the top 20 or 30 cryptos, but why would you buy these things like Math or Monocoin? Like, why would you buy it?
I'm not a huge crypto guy. I just know the basics of crypto world, let's say so. So unfortunately, I cannot answer this question in much details. But what I can give you my assumptions, let's say so, is that developers of this project, it's like, if you're a business owner, if you start your business, you do not need to become Amazon in the next 10 years. Like, yes, of course, if you become Amazon in the next 10 years, you become Jeff Bezos with the worth of like hundreds of billions of dollars. But if you want just to have a regular, normal life, you want to have like $100,000 per year income, you need like, I don't know, 100 clients. And 100 clients is like what, 0.00001% of Earth population. The same stuff with these cryptocurrencies. You don't need every single person to know about this NAV coin or whatever, this 800 position, I guess what, NAV coin or whatever, UDK, whatever I'm seeing right now. You don't need every single person knowing about this coin. You don't need to have every single person talking about this coin. You need to have some small community of maybe a couple of thousands of people. You need to convince them that this is going to be the next coin that's going to explode. You need to convince them that based on this coin, you can create smart contracts that gonna build some software on the internet or whatever. They want to convince them about this, and that's it. If you have this 100, like 1,000 people, 100 people, 100 clients, they buy into initial hype. This is when you build the market cap, and then basically we see how it goes in the future. So this is just my assumption why these cryptos worth hundreds of millions of dollars.
Right. Yeah. It's like. It's like when those people create their own churches or their own religion, and then even if you only have 50 followers, and they think they're gonna go to heaven because they're with you, and they'll do whatever you say, even if it doesn't make any sense. I guess that's the same thing as creating a cryptocurrency. But someone mentioned Pokemon cards. It's just, I mean, it's all the same logic. I guess it's the same thing. As long as you can convince enough people. Cults, yeah, that's cult.
Cult.
So this is the cult. it's like the cult of the 21st century, cryptocurrency.
Yeah. Most of these cryptocurrencies, they will not achieve anything. They will die. The people who invested at the very top, they will lose 90% of their money. Whatever cryptocurrencies, it's like 90% of cryptocurrencies that survive 10 years, let's say 5-10 years, 90% of these cryptocurrencies that will survive the next decade are the ones which are actually being developed. And by developed, I mean, for example, Cardano. Once again, I know that your community doesn't like cryptocurrencies, but Cardano, for example, is one of the cryptocurrencies that is actively developed. Bitcoin is also developed all the time, but it's pretty big. Bitcoin is the equivalent of gold. It was created once. It became the equivalent of store of wealth. And sometimes they have occasional upgrades to the blockchain network. For example, recently they did the Taproot update, which increases the transactions per second, because Bitcoin was notoriously known for very few transactions per second. You can only make, I think, 6 or 7 transactions with Bitcoin in entire world, which basically means before this Taproot upgrade, let's say, so if Bitcoin actually becomes the world currency, so you go to Starbucks, you have your credit card or debit card which has Bitcoin on it, you swipe it, and because it's only 7 transactions per second, you will need to wait like 30-40 minutes before your payment is received. So for this reason, Bitcoin was not possible to become the global currency of the future, because it was so little transactions, so few transactions per second. This upgrade increased the transactions per second. But what I was speaking about originally was about Cardano. Cardano was also solving the problem with transactions per second. They introduced these parallel blockchains. I don't know if maybe there are some crypto people in your community who understand what I'm talking about. So one of the things that Cardano was trying to solve is to increase transactions per second, all the way to several dozens and hundreds of thousands transactions per second, to be the equivalent of Visa and MasterCard. Visa and MasterCard can do about 50-60,000 transactions per second, which basically means every time you pay with Visa, MasterCard, it's almost immediate. Same stuff with Cardano. And this is just one of the things that they try to solve. That's why this cryptocurrency is actively developed. They always try to solve the problem. And this is why you see Cardano, I think right now it's like top 5. It's in top 10 cryptocurrencies in terms of market capitalization. These cryptocurrencies, yes, they might survive 5-10 years the next decade. And from all the other cryptocurrencies that are like not developed or anything like this, like Dogecoin, Shiba Inu, like one cryptocurrency in 1,000, maybe like 0.1% of them will survive the next decade. And just because maybe their developers will become serious, they start introducing something else, maybe something like this, 99.9% of them will just die of the hype, and the development will stop and it becomes worthless. Just like this Squid Game crypto token, which was the major rug pull, even though it was a scam. But it's gonna happen something like this when they just stopped developing, they closed the project, the price went down all the way from like 2,000 to like 0.00007 cents or something like this. So yeah, that's my vision on cryptocurrencies.
Yeah, I mean, I like the idea of cryptocurrencies. The ideas are meaningless, right? You have to execute that idea. I like the idea of not having to wait for my money a day or two, not have to pay transaction fees with my credit card company or PayPal or whatever. Everything's right away. And I don't have to I don't care if the government can track my purchases or somebody, I'm not worried about that, but that's nice to I can buy things without people tracking it. But yeah, like somebody mentioned, if the government is not on board, it may not ever come to fruition.
So they cannot cancel cryptocurrencies. The government cannot, because there's not a single person who takes. There is not a switch which you can switch off and turn the cryptocurrencies off. So governments cannot cancel it. They cannot completely delete it from the internet or whatever you call it. What they can do is to regulate it. For example, transactions with Bitcoin are illegal. For example, if you go to the dealership, you buy a car with Bitcoin, you receive your car registration, and it says that it was purchased with cryptocurrency, but it's not legal, which means that if police officer stops you and it says that you bought it with cryptocurrency, it means it was illegal deal. So you do not actually own the car. So this is maximum what they can do. They can restrict the usage of cryptocurrencies, but they cannot completely erase them from the blockchain, from the internet, from the system. Cryptocurrencies will always be as long as there's people, I don't know, interested in them. It sounds like a tulip money at this point. But cryptocurrencies, no one can delete them. What they can do, governments, especially the US government, they can only restrict the usage of it, which basically means that the maximum what they can do is that they will not consider transactions made with cryptocurrencies legal transaction, let's say, so if you want to call it like this.
Right. It's the same thing as any type of like it's like a bartering system. Like the government can't control if we start to use something else to buy things from each other, like, but it just won't. I don't know. I'm not where I'm going with that thought.
Yes, but also the idea behind cryptocurrencies is that this is the exchange monetary instrument, if you want to call it like this, that you can use anywhere around the world. Like you see all this Venezuela, like Zimbabwe with extreme hyperinflation, like Zimbabwe has like $1 trillion bills. Let's say, so I don't know, 20, 50 years from now, 100 Zimbabwe dollars was equal, I don't know, let's say so, I don't know, I don't track this exchange rate, obviously, but just for the example purposes, 100 Zimbabwe dollars 50 years from now, ago, was worth $1. And that's it. And the idea behind cryptocurrencies is that if you spend 1 Bitcoin, you can buy 1 car with 1 Bitcoin. And this supposedly to be the same like 10 years from now, 50, 20, 30 years from now. It's supposed not to be hyperinflation. It's supposed maybe just to go with the 2% of normal inflation rate. So it's not supposed to be extremely volatile or anything like this. The reason why all the cryptocurrencies, even Bitcoin, are so volatile right now, it is because it's very early. It is very young financial asset at this very moment. Only like, I think like 80% of US population heard about Bitcoin. And I think like less than 30% of US population ever tried buying Bitcoin or selling Bitcoin. And this is US. It's like the number 1 country in the world, the first world country. Everyone looks after USA, what it's doing and stuff like this. So obviously when you take countries like, I don't know, Russia, Ukraine, like Turkey and stuff like this, so many people haven't even heard about cryptocurrencies. So it is very, very early right now, this very moment, to use cryptocurrencies as what they're intended to be. So many people right now, even those people who know something about cryptocurrencies, they consider them as a quick gains. You buy Bitcoin right now for $55,000, you sell it 1 year later for $100,000. So many people think like this at this very moment. But the original idea behind cryptocurrencies was to make it kind of stable, if you want to call it like this, to have the same monetary value no matter what, and never to be hyperinflationary financial instrument, something like this. Let's call it like this, if it makes sense.
Yeah. El Salvador. I bet you even in El Salvador, most people still not many people use Bitcoin in El Salvador.
No, not at all. The president adopted this as a legal tender like several months ago, but not too many people still using it. But at least it's like some recognition, at least.
Right. But I don't know if that's the goal, to be like El Salvador. Nothing wrong with El Salvador, but I don't know if that's a country many people look up to.
No, unfortunately, no. Not yet.
Right. Maybe now that they're so progressive with the Bitcoin adoption. But yeah, we all wish we bought Bitcoin.
I know.
And a long time ago, but
I know
we missed the boat. Same
Yeah.
thing with Tesla. Which is what,
I know. The first exposure I ever had to Bitcoin was in 2012 or 2013, when I think it was like $300-400 per coin. And I did not even close believed in this. So I was like at work, and then I saw one of my school friends. He was making like Instagram stories and like Facebook stories, Facebook posts about Bitcoin is the next big thing, blah blah blah. Invest in this. At this time it was like $300-400, and this was like the peak at this time, because from 2012-13 until 2015 it went all the way from like 200-300 all the way. I might be wrong, but it went down to like $50 or something. So even though if I bought at 2013, I'll be down like what 70% or something. But right now I will be a pretty wealthy man. So yeah, I know what you're talking about. Same with Tesla.
the thing is, it's kind of like if you invested in like any company. But we'll do the Bitcoin example because I remember when it was a few $100s, then it went down. But if you were down 80-90%, and some people would have just sold out and said, okay, I know it's going to zero, I should have listened. But even if you held on and you got your money back, some people would have sold when they got their money back because they were too scared it was going to go down. Who would have kept holding? I mean, because it's not like it went straight up. Nothing goes straight up. Most people can't do that. But if you invested in a company like Microsoft and it goes from 200 down to like 70 a share, you're not going to sell it because you know Microsoft is a great company, and the only reason it went down is because the market is bearish. But if you invest in Bitcoin, like you can't say, oh, I mean, I don't know how you could say like, oh, I know this is the future, like because it's just a currency, like there's no intrinsic value.
It's very early right now. It's extremely early. Once again, everything I'm saying is just whatever I did my very limited research about. I'm in no ways like crypto expert. So everything I might be saying, it might be wrong, might be right once again. So it's just my opinion. My exposure to cryptocurrencies in my entire portfolio is like around 5-7%. And this is because it went up. Originally, when I bought it, it was like only 2%. And the reason why it became like 7% is because of appreciation in value. So originally it was only 2% of my portfolio. Even though all the cryptocurrencies I've bought went down to zero, I lose like only 2% of my portfolio. I'm ready for this risk. It's only 2% of my portfolio. But it's just interesting to keep a look at this. This makes you more involved because as soon as you buy Bitcoin, you start reading more news about Bitcoin. Every time you hear someone mentioning Bitcoin, you're more interested. And what I am doing as well, because everyone is talking about Bitcoin from the positive side. Bitcoin is going to be the next big thing. Bitcoin is going to reach $400,000 in 22. Bitcoin is going to reach 100,000 by the end of 21. Everyone hears about this. What I'm trying to do is to find negative things and try to evaluate them if they make sense. Because you don't need to look for good news, but you need to look for bad news. And whenever I see bad news, I try to evaluate them. I try to be in the shoes of this person who is saying why Bitcoin is not reasonable or anything like this. And then I compare it to whatever I'm thinking about this particular cryptocurrency and decide whether I should stay, whether I should sell everything, whether I should buy more, or whether I should do nothing. So I'm always trying to find something bad about what I'm holding, and then we see how it goes.
Yeah, that's the best way to follow a stock or the stock market. You have to put your money in there, and if you and I'm not saying put like $20 in there because you probably won't follow it if you don't have it. But the more money you put into it, the more you're gonna follow it.
Absolutely.
And it could be painful if you lose money, but you'll learn a lot, and that's the only way to learn. I learned a lot. I lost a lot of money on a lot of trades, but that's the only way to improve and get better. You don't want to risk if you have to feed your kids, or you don't want to risk that money. But of course, you got to put some skin in the game. If anybody's out there, because a lot of people ask that question, how do I get started in the stock market? It's you just got to jump in. Like there's no other way to do anything. in life except to do it. You can't be good at baseball just by watching people play baseball. You have to just start playing.
You can't. My favorite quote about this: you cannot learn swimming just by reading books about how to swim. You need to actually swim.
You learn nothing. But if you're already good at, like, if you already like start getting comfortable with some things in the stock market, and then when you listen to people like us, or you listen to anything, you read Investopedia, then you absorb it more. But you don't really absorb anything if you don't have anything to like any history with it. If you want to be a runner, run.
Exactly. Yes.
It's like anything. So what other stocks? I didn't know Bitcoin was illegal. Somebody said.
No, it's once again, it's illegal, yes, but people can still spend it. It's that if you buy something with Bitcoin, it's not going to be considered like a legal transaction, but you can always spend it. Even though it's banned or anything like this, you can, as long as you have access to the crypto exchange, so that's it. You can just buy Bitcoin, like that's as simple as that. You cannot ban it. You cannot switch off. You cannot press the button and people do not have access to Bitcoin. Like if you switch off entire internet in your entire country, yes, most people will have troubles buying Bitcoin. But like as long as people have internet access, access to the crypto exchange, they can buy and sell Bitcoin. Like it's not even a big deal.
Yeah. So I did a Lucid video today. And even the most aggressive situation, it's still overvalued. And I'm assuming significant growth. But that doesn't mean anything, because
markets are irrational.
Yeah, it's especially a company like this. It's not about how much money they're making, how many cars they sell. It's just about what other people are willing to pay for the stock.
Just like this. Whenever you are selling a stock, there is a person who was willing to buy this stock at this price, which basically means if you sell Lucid at $100, when the stock market capitalization will be like what? Like I have like what? Like $200, $300, $400 billion. It means that there is a person in the world who is willing to buy a Lucid with like what 500 car sales by the end of 2021 at $400 billion stock market capitalization. So this is also one of the first things that, not first things, but this is also one of the things that I also always keep in mind whenever I'm buying stocks. If I'm buying a stock, it means that someone just sold this stock. And I need to see like why this guy sold this stock. Like, is it too overvalued? Is it something else? There is some bad news or anything like this. So every time I'm buying something, I'm questioning, why would someone sell this stock at this price?
Exactly. Has anybody been following Lucid at all? I didn't know Ford tried to acquire Lucid at one point. It seems like all the big car manufacturers try to acquire EV companies because they did acquire Rivian or bought shares in Rivian. But Lucid, the reason it was able to it got the money to build out its cars because of the Saudi Arabian fund. The biggest wealth fund in Saudi Arabia invested $1 billion in the company. So that's how they got the cash to get the factory and make a prototype of their car. But it's crazy. It's so expensive. The cheapest car is $77,000. That's the cheapest. I'm sure it would be more because you probably want some other things in there. So you probably at least $80,000. I don't know. I don't think that many people buy $80,000 cars.
So this is the thing about Lucid. I just invested in this very recently, so I'm just starting my research and everything. But even Tesla, I'm even listening to the audiobook right now about Elon Musk and all his like SpaceX, PayPal, and all this his previous startups, and especially Tesla, obviously. Tesla started with Roadster, and this was also very, very expensive car, which was like $100,000 or something like this car. So they also started with very expensive car. The most expensive part of every electric vehicle is the battery. And the reason why Lucids are so expensive, it is because they are truly the longest range electric vehicles on the market right now. They're right now the longest household. The longest range they have right now is 520 miles, but in fact it's 516 miles. There is not a single electric vehicle manufacturer that even passed 500 miles range, so they're the first one. In addition to that, there's Formula One, when all this like racing and everything. There is also Formula E, which basically means it's the same like racing, but it's racing with electric vehicles, electric cars. All the cars in this Formula E are electric cars. Every single battery in Formula E is by Lucid. Additionally, Lucid creates, manufactures, whatever you want to call it, energy storage, which is going to be also pretty big thing in the future, because right now we have energy sources from like oil, gas, I don't know, like all this kind of stuff. But in the future, whenever we're going to have oil, gas, wind, solar, there's going to be so much energy that's just going to go to waste. And one of the biggest markets for the future is the energy storage industry. And Lucid also produces energy storage. So it's not like, Tesla fanboys, they always like to say, Tesla is not just a car company. So Lucid is also not just a car company, even though it makes cars and this is what it's famous for. But Lucid is not just a car company. So once again, right now, the most expensive part of every electric vehicle is the battery. And since Lucid has the batteries with the longest range of 500 plus miles, that's why they're so expensive. Starting, yes, like you said, at 77,000, all the way to 150, I think 160,000. But in the future, I did participate in the most recent earnings call. In the future, yes, they are planning to produce cars with the less range, somewhere around 300-400 miles range, which basically means that they will bring the price of the car down. And one of the biggest things why I have not so much, but somewhat confidence in Lucid, because once again, it's just one of my newest purchases, is that the team, because you cannot invest in companies like Lucid, which just became public, which just started producing electric vehicles. They want to deliver only like 500 cars by the end of 2021. You cannot analyze these companies by their financial statements because there's nothing to analyze. They don't have, revenue, they don't have anything like this. So in this case, you need to analyze the team. Like once again, Tesla. You don't need to analyze the early Tesla based on its income or revenue or operating expenses, whatever. You need to analyze Tesla based on its team, Elon Musk, other people, I forgot their names. I'm not following Tesla that closely. But you need to analyze the team. And Lucid team right now is the combination of former Tesla executives or senior managers, plus Apple former executives and senior directors, plus some car manufacturers like Mazda, Volkswagen, Ford, I think Chevrolet, Cadillac. So the team is very good in Lucid. Team of Lucid is people who know what they're doing. Because another electric vehicles company, which is popular in Canada at least, is the Polestar. And Polestar team is basically all former Volvo employees. So this is basically electric Volvo. Volvo is a very reliable, safe car, as we all know, but this is just literally just people from Volvo. So Polestar will become electric Volvo. But Lucid, it brings something from Apple, something from Tesla, something from regular original cars, something like Ford, Cadillac, and things like this. And this combination, like unfortunately, the CEO, Peter Rollison, is a little bit old already. So this is what I don't like that much about Lucid, is that the CEO is a little bit old guy, but still the combination of executives, of senior directors, managers is very, very good composition of like executive level of the people who are gonna manage the project, manage the car, create the car, and develop the car and sell the car basically. Once again, if it makes sense.
Yeah, the CEO of Lucid
Yes.
was the ex
Yes,
Tesla
yes,
engineering executive.
Yes, he was the one who developed Tesla Model S. So the fastest producing car, this Tesla S, Plaid S, and stuff like this. Yes, he was chief engineer of this. So this is why I have pretty good confidence in Lucid is because of the team, not because of what they're doing right now.
But do you ever like look at the executives, and it always sounds good. It always sounds like they have such a great team. I never read like about the backgrounds of executives, and like it didn't sound amazing.
Mm-hmm.
I guess they have to portray their best qualities. But yeah, I don't know if anybody else has that issue. Like I almost find like I don't even like benefit from learning about the people running a company. Maybe if I knew them more, if I had more information about what they did in the past, because you only write positive things about yourself. It's like your resume.
Mm-hmm.
But there are some people, shady people, who run companies, and it looks good on paper. But if you know stuff they did in the past, you may avoid those companies. I think I was talking about Archegos, that fund that went bankrupt. It like the Dark Pulse guy. Have you heard of Dark Pulse? You probably never heard of Dark Pulse.
I don't think so. Doesn't sound familiar.
It's really small. I don't know about that. Just because Lucid currently has a lower market cap doesn't mean they'll achieve what Tesla has. No, definitely not achieve what Tesla has. I wasn't implying they would be $1 trillion market cap. I'm just saying there's a better chance of them tripling their market cap than Tesla, for instance. Like to go from 80 billion to 240 billion is a lot easier than $1 trillion to 3 trillion. So I was saying there's less upside with Tesla. Although, Lucid could crash and you lose 60% of your investment while Tesla goes up 30% in the same period. So there's no right or wrong answer. Imagine the Enron testimonials. I did that once, not with Enron, but I remember I was listening to earnings calls of companies like a quarter or 2 quarters before they went bankrupt. And it was like the stuff you hear, like it sounds amazing. Like they have such great plans. They have all these things going on. But the guys knew the company was dying, but they couldn't say that on the earnings call. So they would portray this amazing company, and then the company files bankruptcy the next month. That's funny. Yeah. It's probably getting late by you, right?
10:30 p.m. So we can start wrapping it soon. Like it's okay for me, but yeah, I guess 90 minutes live stream was already getting boring and tiring for the people to watch. So in this case, yeah.
Yeah, usually we do 90 minutes.
Okay, good for me.
How about we talk about Micron and Intel, 2 companies Russian guy talked about. I own both heavily. Yeah, I think semiconductor stocks are I think almost any semiconductor stock is a pretty good investment these days because of the demand. But you own Intel, right?
Yes, I do have Intel. I did research Micron half year ago, maybe like 6 months ago or something like this. At this moment, it seemed to me like kinda, yes, maybe good purchase, but still like there was so much uncertainties about the future. So the reason I'm still holding Intel, even though I started holding Intel more than 2 years ago, before they announced the delay of their newest chip when the price crashed like 20% in one day. It's because at this time it was all good. Everything was good value play, good dividends and everything like this. And everywhere, every laptop I ever had was Intel inside. So the reason I'm still keeping Intel is because of the new CEO. If there was a previous CEO who was not introducing too many new things, who was not trying to break into the graphics GPU market, I would most likely, unfortunately, cut my losses. Like, unfortunately, I'll lock in my losses, sell Intel, and most likely just buy AMD, because AMD is pretty good. And I'm talking about buying AMD like right now, like it was like what, 20%, 30% up in the last month or something like this. I'm talking about buying AMD like 4, 5, 6 months ago, before all this announcement that they made recently. So Intel, yes, unless there will be a new CEO, I will most likely sell. But this new CEO guy, he looks pretty promising. So many new projects he's planning to do. And once again, this is not a big part of my portfolio. I think Intel right now is like maybe 3-4% of my total portfolio. Okay, I know that no one can ever imagine Intel going bankrupt and disappearing, but even if it does, I will just lose 4% of my portfolio. I'm ready for this. But whatever they're saying, whatever they're talking about, their future perspectives, there is not upside of like 500% growth, because Intel is like several billions dollars company, dozens of billions, hundreds of billions of dollars companies. So obviously it's not going to go to $5 trillion. So there is no much growth as in something else. But I'll just keeping it mainly for dividends, once again, mainly for the future, mainly being a long-term investor in this company, and we see how it goes. Simple as that.
Yeah, that's what I like, investing in things that I know. I mean, obviously, no one can know if a company's going to go not going to go bankrupt, but I think you're playing it safe when you invest in a company like Intel or like McDonald's or Starbucks or Microsoft. Like, it's very unlikely a company like that will go bankrupt. So, but you may not have as much upside. You may not 2, 3, 4, 5x.
Yes.
But yeah. But
once
that
again,
strategy works for me so far. So
yes. Coming back to beginning of our conversation, long-term investing is not about maximizing your annual returns. It's about protecting the downside 5, 10, 20, 30 years from now. Like, if you're next to your retirement and there is a year when market crashes 30%, this 30% crash can easily erase 5, 10 years of progress. So long-term investing is about protecting. Have the majority of your portfolio in index funds. If you want individual stocks, invest in something proven, like whatever I also like to do. If there is a company that I'm using myself, like Apple or whatever, or if there is a company that I'm exploring in investing, I don't know if you heard about Lululemon, this Canadian like closest company, and like gym, fitness equipment, yoga equipment. I actually, before investing, I go to the shopping mall, I go inside the store to see if the store is full of customers. And if I see that this company, this store, it has like there's a line for the cashier to pay for their products to check out and stuff. Like if I see that there are people inside, I'll have more conviction about this company. Which brings me to the small quick story about Peloton. You know, Peloton decreased like what 40-50% in the last month or two. Peloton, we have several stores inside our shopping mall for Peloton, and this store was always empty. There was never a single person inside Peloton store.
Always like that, always empty.
It is always empty. Yes, some people say, well, Peloton people buy things online. Well, people buy Apple online, people buy iPhones online, but every time you go to Apple store, it's full of people. You need to wait outside until you can go inside. And this is the reason why I never, like, people were saying Peloton is the next $1 trillion company. This is not just a bike company. This is so innovative. I go inside the shopping mall. I see that the store never has people inside. I know that as soon as the pandemic is over, people will just start going to work. They will stop exercising. Even me, my family, we had a bike, not Peloton, but bike in the past. Like my mom got this as a present. She used this bike for like 1 month and then she never used it again. This bike was standing like collecting the clothes, like you just put your clothes to hang on this bike. That's it. No one was using this anymore ever in our lives, this bike. And simple as that, it's like down 50%.
That's how it is. Yeah. What a crappy company, Peloton.
I don't like it, yes, to say the least.
It was up a lot.
It was one of these cool kids stock. Everyone is talking about Peloton. If you're invested in Peloton, you have views on YouTube. You're a cool kid. You're a part of this cult of Peloton. But now that's it. Now everything is back to normal and it's down 50% or even more.
Yeah, I think you're better off investing in an overvalued company like Apple or Costco than you are investing in an undervalued company like a startup, for instance. You're going to go much further. Because anything could be undervalued. You can you can get a disgusting meal that normally costs $5, say the street food. New York, though, has pretty good street food. But you could have a meal that normally you hate and you wouldn't eat for $5. And if it costs $2, doesn't mean you want it because it's undervalued. NVTA, I'm not sure what that is. Invitae. And diagnostics and research. Oh, it's right here in San Fran. Yeah, hard to find good deals in this market.
Yes, it is.
But okay, I guess we'll wrap it up because I think it was a pretty good call. I think we broke through 30 people at one point.
I saw 28, and this is like 5 times more than I usually get. So this is incredible for me experience. Thank you so much for having me here.
Yeah, and make sure you subscribe to the Russian dude. Somebody said I saw 31.
6 times more than I usually get.
Maybe next time now you'll get a lot more. But I still, with 20+ thousand subs, I still can't even only get 30 people. Because I think most people sub and never ever watch a video, but that's how it is. Okay, yeah, thanks a lot. I appreciate you being on a call with me, and probably the time, and it's Saturday.
Okay, yes, thanks so much once again for having me. Thank you all so much for all your questions. Bennett Williams, JD, Joe Murphy, thank you all so much. This is what makes the live stream so cool, so entertaining, so engaging, is because of the questions. If we just talk about our stuff, it's like you just feel bored and everything. But just when you hear the hosts answering your very own question, this is what makes you look into your screen, listen to the headphones without okay, they're answering my question. What they're gonna say? So cool. So thanks so much. You are the ones who made this possible. You're the ones who make it entertaining. It's all because of you, and I cannot thank you enough for watching this. Thanks so much.
Yeah, I agree with that. I think that pretty much sums it up. Okay, I'll see you guys around next Saturday at 6 p.m. Somebody from Singapore wants to be on a live stream. So we'll see how that goes. Okay, so I'll talk to everybody later. Have a good night.
Good night, everyone. Good night, Canada. Good night, Russia.